Hello, Rich Insiders. Welcome back. It's great to have you with us. Today we are going to explore the shocking reasons why Americans live a poor life. If you're tuning into our content for the first time, don't forget to stay connected with us to enjoy all our latest updates. It is no secret that America is one of the wealthiest nations in the world. Yet, the life of an average American is not so pleasing. Wealth inequality in the United States is so high that a whopping 67% of the total wealth in the country is owned by just the top 10% of earners. In fact, financial distress for some Americans is at the Great Recession levels. But what went wrong? And will the American dream become reality once again? Come, let's find out together in this video. The cost of living crisis in America has reached unprecedented levels, surpassing those of any other nation. According to recent data, the United States faces soaring housing prices, healthcare expenses, and education costs, far outpacing wage growth. Housing affordability is particularly dire, with cities like San Francisco and New York experiencing staggering rent increases. Rising home prices and interest hikes have resulted in a scenario where buyers in half of the major cities in the US require incomes of at least $100,000 to afford a home. Healthcare costs also continue to burden families, with millions unable to afford even basic medical insurance or treatment. Additionally, the cost of higher education has skyrocketed, leaving many students saddled with crippling debt. According to data from the Federal Reserve, outstanding student loan debt in the United States exceeded $1.7 trillion. The Department of Education reports that around 9.7% of borrowers who entered repayment in 2017 had defaulted on their federal student loans within 3 years. The increased cost of such basic necessities like housing, healthcare, and education is leaving many Americans with little to no disposable income, making it harder to make ends meet. Americans are infamous for accumulating insane levels of debt. 35% of Americans have indicated that they are currently experiencing the highest levels of debt in their lives. According to data from the New York Fed, U.S. household debt reached $17.5 trillion in the last quarter, with an all-time high credit card debt accounting for approximately $1.1 trillion. Living beyond one's means has become all too common in today's credit-driven society. It goes without saying that the average American is saddled with an enormous debt burden. The number of Americans facing financial distress due to credit card debt has now reached levels similar to those seen during the Great Recession. Every month, a large portion of their paychecks goes straight to debt payments, leaving Americans with barely enough to cover their needs and wants. When debt payments eat up a large portion of income, it can lead to a cycle of financial hardship that is difficult to break free from. It's a vicious cycle. High cost of living forces people into debt, and debt in turn exacerbates financial strain, extending poverty. Financial literacy is a crucial skill that is often overlooked in our education system. It's more than just understanding how to balance a checkbook. It's about knowing how to make your money work for you. It seems that a significant portion of Americans lack financial literacy, and this lack of knowledge is causing stress. A recent study revealed that more than 56% of American adults admit that thinking about their financial situation makes them anxious. According to the National Financial Educators Council, over 2/3 of people in the United States fail a basic financial literacy test, and only 17% of US adults said they took a personal finance class in high school. This lack of knowledge can lead to poor financial decisions, such as excessive borrowing, inadequate savings, and a lack of investment in the future. The consequence is a cycle of financial instability, where even modest setbacks can lead to significant hardship. This is one of the evident reasons why the average Joe is feeling poor in America. Now moving on to one of the most important factors behind Americans' poor lifestyle. American wages are not matching inflation standards. While the cost of living continues to rise, wage growth has been relatively stagnant, a statement that rings true for many Americans. But why is this the case? Well, over the past few decades, we've seen a significant slowdown in wage growth. Despite productivity soaring, the fruits of this labor haven't trickled down to the average worker. In fact, the Economic Policy Institute found that since the late 70s, productivity has grown 6 times more than pay. According to a Statista report last year, the federal minimum wage in the United States, when adjusted for inflation, was 40% lower than the minimum wage in 1970. But for the first time in January 2024, inflation amounted to 3.1%, while wages grew by 5%, which is a really good news for several Americans. An increased gap between salary growth and inflation can make people of any country poor. This is why you should look for market corrections in your job if inflation is steadily on the rise. So, how does the future look for average Americans? Will there be light at the end of this tunnel? Let's find out. Despite the continued expansion of GDP and unemployment being at a 5-decade low, Americans are still pessimistic about the US economy. This disconnect has prompted policy experts and economists to investigate the underlying causes and to look beyond the nation's persistent inflation. The US consumer appears to be in relatively good shape. The majority of individuals who desire employment have secured jobs, and wages are now surpassing inflation. Additionally, in 2023, the stock market rebounded from a challenging bear market, boosting the retirement and investment portfolios of millions of Americans. Many Americans continue to express frustration over their inability to purchase the homes they desire. Even though mortgage rates are no longer as high as 8%, they remain significantly higher compared to rates observed in recent years. All these factors contribute to a sense of being stuck, particularly among younger Americans who feel they are missing out on important life milestones. In summary, the financial struggles faced by many Americans can be attributed to the government's policies and the failure of businesses to cope with inflation. The significant rise in cost of living, combined with growing debts, stagnant wages, and lack of financial literacy, only make matters worse for most Americans. So, what are your thoughts on this? Is the American dream no more a reality? We encourage you to share your thoughts and experiences in the comments below. Until next time, take care.